Will the stock market crash in 2022? We're seeing a lot more predictions of an impending stock market crash, including one by the big short investor Michael Burry. In this video, I'm going to share 3 reasons why some experts believe that a stock market crash is coming soon. And I'm also going to share 3 counter arguments why they may not be a stock market crash at all. What are the top 3 reasons why many analysts are predicting a stock market crash in 2022? Reason number 1, inflation is skyrocketing. Inflation has been hovering at around 2% or just below 2% for quite a while now, more than a decade. And guess what? It just hit more than 6% in October and November. I don't need to tell you this, gas prices are up. Our food or grocery bills are up. It's really expensive to buy cars. Housing prices continue to climb. And inflation is hitting its highest since June of 1982. So that's reason number 1, inflation is skyrocketing. Number 2, the Federal Reserve is finally realizing that unless they do something about it, this high inflation may not go away. So now what's happening is the Federal Reserve, our central bank, is now planning to raise interest rates in 2022. The word on the street is they're going to raise it 3 times. There are going to be 3 interest rate hikes in 2022, most likely, possibly starting as early in March. And typically, high rates are not good for fast-growing technology stocks. Now, reason number 3 on why some analysts are predicting a stock market crash in 2022 is because the US stock market seems very expensive. Stock market valuations are at a 20-year high. Now, what does that mean? And we're gonna geek out a little bit here and look at one particular metric that stock market gurus often look at, which is the Shiller price to earnings ratio. Shiller is a famous economist that created this metric, Robert Shiller, and we can just call it the Shiller PE ratio, which stands for price to earnings ratio. And right now, well, actually, this number ranges from 5 to around 40, historically speaking. And if the stock market PE ratio is around 5 or 10, that's considered really cheap. It's a great time to buy. The average is around 15 or 16. And what is the Shiller PE ratio right now for the US stock market? It stands at 38, which is twice its average or median. And the last time we saw that kind of valuation was back in the year 2000, right before the dot-com bust, when there was a technology stock bubble and stock market crash in year 2000. Jeremy Grantham, a famous investor who correctly called the technology bubble and the housing bubble, has labeled the stock market, and I'm going to quote, as an epic bubble featuring extreme valuation, explosive price increases, and hysterically speculative investor behavior. Let me share 3 counter arguments on why the stock market may not necessarily crash in 2022. Number 1. Yes, inflation is high and that's bad, but in theory, stock market returns are neutral with inflation. Companies can pass on costs to consumers, and stocks can actually be a good hedge against inflation. So during the high inflationary period of 1966 to 1982, during the oil crisis, the S&P 500 returned 6.8% annualized, matching the inflation rate during that time period. Number 2, high interest rates do not necessarily lead to stock market crashes. On the average, if you look at the historical data, the S&P 500 decreased by 1.8% in the 3 months after the first interest rate hike, but it has then gained 7.7% after 12 months. If we look at more robust data in the US, Japan, and Germany, there seems to be no relationship between interest rates and stock price multiples. Number 3 counter argument We talked earlier about the stock market being expensive. Now let's look at that more closely. Let's take, for example, Amazon, whose price to earnings ratio or PE ratio is 62. Now again, the median of the stock market is 16. 62 is really high. So that seems quite expensive. But if you look at it more closely, this 62 PE ratio is actually quite meaningless for a company like Amazon because they're spending a lot of money on infrastructure and whatever they need to scale rapidly, which depresses their earnings and profits. Morningstar actually estimates that Amazon is currently trading at a 21% discount as of January 10, 2022. And if you look at the top 10 holdings of the S&P 500, only 3 of them are actually overvalued. That's again according to Morningstar's estimates. Keep in mind that the tech bubble in the mid-late 1990s, that was a period when any company that claimed to be an internet stock, investors were just buying it even though they had very little revenue and no profits. And that's not really happening right now, except for maybe meme stocks, cryptocurrencies, and special purpose acquisition companies. But I'm interested in hearing in your take in terms of what you think will happen in 2022. Is the stock market going to crash or will it not crash? If you ask me, market timing doesn't really work and can actually backfire. I know of a well-respected CFP, Certified Financial Planning Professional, who back in 2013, that was like 9 years ago, has been predicting the US stock market crash. And he personally shared that his investment portfolio was in 50% cash. And imagine the lost gains that he's been experiencing all this time. Now, if you're still worried about the stock market crash potentially in 2022, check out our video on I savings bonds. Is 7.12% guaranteed for real?